I'm pretty optimistic about 2021, and for a lot of reasons. I think that, we'll probably start to see some positive GDP recovery. I think in the second half of the year, when the vaccines are sort of rolled out and people actually get to take the vaccine and we sort of figure out the distribution and get closer to herd immunity, we'll get that 11 million or a big chunk of it back, group of people back to work. And I think that, a lot of that will restart the economy. Fiscal and monetary policy are going to continue to be supportive towards the market. We saw the America Rescue Plan rollout idea yesterday. So, whether or not it passes in the form that it's presented, I do think that the market will be, flush with cash, and that the economy will be flush with cash. And what happened last year when, consumers got those checks is that they started spending. So once the consumer starts spending, corporate profits look better, earnings have a chance at getting better. And I think that overall getting people back to work and the economy restarted in the second half of the year will lead to a larger and quicker recovery.
So thematically, I mean, your background kind of gives you a little bit of insight into kind of how trends develop in certain industries, certain sectors. What exactly are you seeing this time around, at least in the early going for 2021? Is it still about the technology trade? Is it healthcare? I'm hearing a lot more about things like beaten up energy and financials. Is that value trade back? What's biggest on your radar right now?
So I think it's a little bit of all of the above. We always advocate for the barbell approach. You want to hold on to your quality names, the Apple and the Googles and the Facebooks. They're probably not going away. These are quality companies that are flush with cash, and maybe the growth won't be on the same trajectory, but rates are low enough. We see little bumps in the 10-year, but they're low enough where cash is cheap. And again, these companies have strong balance sheets. You want to look into the services industry a little bit, right? The airlines are going to get back up. The cruise lines will get back up. The banks will probably start doing better. Some of the service sector industries like restaurants and, even Starbucks, which is sort of like widely open now for takeout. Once they're fully open, I expect to see some opportunities there. But one thing that isn't going away and is in its infancy, in my opinion, is to your point, theme-wise, is next generation sector investing. So you want to look at like the next sector of communication, which is 5G, names that connect us globally, allow us to share information globally and quickly. They touch AI, they touch healthcare, they touch tech. You just talked about SPAC. SPAC is a huge introduction to the market. It's nothing new really, but it almost feels like something new because we had this 400% growth of SPACs hitting the market last year. So getting access to, and look at ETFs here. So you get access to a Social Capital, a Virgin Galactic, a DraftKings, and a SoFi in the same index. These are going to democratize IPO and PE like deals for the average investor. So I think that even if recovery is slow, innovation and technology are really just starting now. And it's sort of 10 years ahead of its time, I think, because of work from home. So if I was thinking about like, what will the next, year or decade of FANGs be like, it's going to be in disruptive technology and innovation. So next generation sectors like 5G and SPAC.
Shepard Smith here. Thanks for watching CNBC on YouTube.